The Nikkei stock average has dropped more than 4,500 yen. Looking at the VIX, it has already exceeded 70. At this point, I think the decline will temporarily stabilize, but I believe there are many people who have bought at a price higher than the current one, and those who have bought on margin will face margin calls, so it may take a considerable amount of time for the stock price to recover. This situation is not unique to Japan. Stock prices are also falling in the United States. Tonight, in Japan time, it will be interesting to see how American stocks perform, but since the futures are down, I think the market will open quite low. Currently, stock prices are falling globally. Last year on this channel, I mentioned that there would be significant movements before the American elections, and now, I believe we are seeing a major decline at this timing. While this is already a significant drop, when we compare the rate of decline with past data, it seems there is still room to fall. This situation is not triggered by any one specific cause but rather a culmination of conditions that were ready to trigger such a scenario at any time. American interest rates have been high for quite a while, which acts as a brake on many businesses. Consequently, American corporate earnings are naturally deteriorating. Additionally, there have been reports since last year that the commercial real estate sector is in serious trouble. However, the emphasis on AI has led to significant rises in certain stock prices, and American stocks have continued to rise, masking the negative aspects. I believe that during this process, those who understood the situation sold off their holdings, and general investors ended up buying at high prices. Although it has been pointed out for nearly a year that there are various problems with the American economy, stock prices have continued to rise significantly. Therefore, even when risks are mentioned, the market does not collapse immediately. Speaking of China, major real estate developers there have been raising funds at interest rates above 10% annually to repay debt with new debt. When I mentioned on this channel that this couldn't continue for long, it took years for the Evergrande Group's issues to be reported in Japan. Even when recognizing risks, the market can continue to rise, making it a frightening place. However, once things turn negative, the decline can be rapid. In Japan, multiple misfortunes have coincided. At the same time that American stocks are falling, interest rate hikes have been announced, leading to extreme movements in both the exchange rate and stock prices. This time, I'd like to talk about the US and China. Currently, the tension between the US and China is rising, particularly in the high-tech sector, where trade restrictions are being imposed. Many might think that the economic relationship between the US and China is cooling, but in fact, there are still close ties outside the high-tech sector. The slowdown in the Chinese economy negatively impacts American corporate earnings. For example, looking at this article about McDonald's, global sales have declined for the first time in 3 years. Although it doesn't specify which countries, it mentions that the recovery of the Chinese economy is slower than expected. This means the Chinese economy is in poor condition. There are many similar stories. Next, let's look at Starbucks. The title of this article explicitly mentions China, indicating that the decline in sales is due to the weakening Chinese economy. For Chinese people, especially those coming to cities like Shanghai from rural areas, Starbucks coffee is quite expensive. If the economy slows down, they might prioritize meals over coffee. Additionally, Chinese companies often emulate successful business models. A well-known example is Luckin Coffee. For foreign companies, this means competition with local Chinese companies. Although McDonald's has many imitators in China, none have grown to rival it significantly. Perhaps franchising is a quicker and cheaper option for them. Nonetheless, when the economy worsens, consumers may prefer cheaper alternatives to McDonald's. Both McDonald's and Starbucks are struggling in China, negatively impacting their overall performance. Here's another example from Apple. The iPhone is very popular in China, but now Apple is not even in the top 5 smartphone brands in China. As people's financial situations worsen, they turn to cheaper domestic smartphones, negatively affecting Apple's performance in a huge market like China. There are many other examples of American companies heavily invested in China. When I mentioned years ago that Evergrande's methods were unsustainable, information was already globally available. It was clear that the Chinese economy would face serious issues. Economists knew it wasn't sustainable, and companies heavily trading with China should have been aware and diversified their operations. Companies that fail to prepare will suffer as the Chinese economy slows. The recent sharp drop in stock prices is not surprising given the ongoing issues and the hype around AI and stocks like Nvidia. Savvy investors likely sold off their stocks, while less informed general investors bought at high prices. This pattern repeats in the stock market. Informed investors sell at peaks while general investors buy in, leading to losses for the latter. For safety, listening to bond traders, who are mostly professionals, might be wise. Bonds are less risky compared to stocks. In the world of stocks and FX, information can be unreliable and dangerous, often leading to general investors being misled. Regardless of the market conditions, information is available, but people tend to focus only on reinforcing their current beliefs, which is dangerous in investing. If the decline continues this week, we'll likely hear more about impending economic doom, and I will keep observing the situation. That's all for this time. See you in the next video.